lecture, right, of retail banking and wealth management. So actually, first lecture of retail banking and wealth management means it's the first lecture for everyone. Up till now, this topic was never taken. Why? Because this topic is totally new. It's from May 23 only, isn't it? Okay, let's go to the portion first. See here, today is the introduction session. Okay, so I'll be covering the broad guidelines, what all are there in the paper over here. Okay, so see here, now for May 23, you are having these 4 papers 1, 2, 3, 4, right? Earlier, how much did you have? You had 3 papers, right? 3 compulsory, now it's 4. Which one is common? See this, PPB, it's common, accounting, it's common. Okay, and third, you had legal at that time, right? Now legal is gone, legal has gone for CAIIB. Of course, the name is changed, it's called as BRBL in CAIIB. So instead of there, they have brought one retail subject from CAIIB to JAIIB now. So this retail was earlier in CAIIB as an elective, now it is in JAIIB. Okay, and this new topic has been added, Indian economy and Indian financial system. Okay, this was there earlier also, but it was not there as a separate topic. In earlier PPB, we had this topic combined, and also in ABM, CIB, we had this topic combined. We had a full module on this, module A. So now that is everything gone, new subjects, new books, everything is new. So let's focus on our topic today, retail banking and wealth management. I'll be taking the lectures of retail banking and wealth management. Okay, see here, this topic is a combination of 2 topics. Remember, retail banking was a separate topic earlier and wealth management was a separate topic. Okay, so wealth management is generally not the part of banking, actually core banking. But what has happened now? Wealth management has become a important topic in the retail banking. Why? Because everyone amongst us are facing the clients who are so much harassed by the rates of the FDs now. FD rates are, where are the FD rates now, right? 5.56, max to max 6 now. Recently they have increased a bit, but then also not more than 6. So all the senior citizens who come to you, all those risk averse customers, those who come to you, they all are just cursing the FDs now. We are not getting that much amount, this much amount. Earlier we used to get all those history, they used to tell then. In my time, I used to get 12% FD rate, isn't it? Gone everything. In fact, those days will never be there. In fact, that is a good sign actually. See here, many people might be crying that FD rates are lower, but that's a good sign. FD rate should be lesser as compared to that, because then only banks will earn. Means bank can sustain. Earning is a separate part. Sustenance is important, isn't it? So that's why this wealth management topic has come into picture. Wealth management means what? It includes not only FDs. See here, it includes FDs, but it also includes other risk related elements. Now risk related means what? Mutual funds, insurance, then other avenues of investment, right? So all these things are covered under wealth management. Mainly the topic for you under this wealth management is for the personal finance, okay, and personal wealth management. It won't be for corporates, it would be for personal, it would be limited to that. Okay, now what is retail banking? See here, everyone amongst us, mainly 99% amongst us, work in retail banking only. Okay, so this topic you already know, many of us already know what it is, what do we handle in this, all these things are covered. Okay, so let me give you the gist of what all are the 4 modules of this retail banking and a bit introduction of each module. Okay, introduction to retail banking means it will be what is retail banking, how does it earn income to the bank. That is very important now, because retail banking has a very important aspect which other banks don't have. Means other branches of the banks don't have. What are the other branches? I'm telling you about this other branches. What are the other branches? Other branches means basically corporate banking, trade finance. Okay, shall I write it over here? Corporate. Okay, there are almost 7 to 8 branches. Okay, corporate, trade finance. I'll write TF over here. Okay, Then treasury. Treasury is also one of the important aspects. Okay, you type whichever you know, others which you know. These three plus retail, then merchant banking. Merchant, okay, merchant, MER, merchant banking, okay, merchant banking. That is also one of the important businesses of the bank, okay, merchant banking business. Then we have loans, corporates we have already studied. Then credit division, that comes under corporate only. So these are the broad guidelines, okay, these four plus retail, okay. We can have many other aspects also, but what is the important part which is there in retail and which is not there in others? Who can type? Main part in retail is risk. Risk is diversified in retail. The loans for risk for retail are, what are the sizes of loans? Hardly 10 lakhs, 15 lakhs, 20 lakhs, 50 lakhs. Home loans 1 crore, 2 crore home loans. Okay, but 2 crore in terms of banking is very small amount. Okay, so that's why it's considered under retail. Risk is very less, diversified risk. We give, suppose if I am having, let's say, 100 rupees, and I am giving that 100 rupees to single customer called as Reliance. Okay, tomorrow if the Reliance company fails, full my 100 rupees is gone. But in retail, I am having that 100 rupees, and what am I doing? I am giving them 1 rupee to 100 clients. Okay, so what happens? Is there a possibility that all the 100 clients will go down? No. That's why the risk is diversified in retail. That is a very important aspect of retail, and that's why all the banks are focusing on retail banking now. Every bank, okay. You might have heard about the problem of which bank? Yes Bank. Okay, some few years back it had faced the problem. Now Yes Bank has again come up. Okay, but what was the major problem of this? All that fiasco happened of those loan NPAs, everything. That's okay, but the main point over here was Yes Bank at that time was 68% in corporate banking. Now look at the profile of Yes Bank. Yes Bank is mainly in retail banking now. So retail banking is a major to go department in this banking space. What are the other avenues of retail banking? Important ones. Here, focus everyone, whatever I am telling you now. Why all banks are focusing on retail banking now? Because number one, the clients required for this corporate, trade finance, treasury, merchant banking, you call it any other name. There may be 6, 7 more names, okay? The clients required for this, you will get it from retail only. So that's why retail banking is very important. The clients you will be getting from retail banking only. This is very important statement, okay? So the clients for retail, this corporate, trade finance, treasury, merchant. Suppose here, I want a client for corporate. So what will I deal, whom will I deal with? I'll deal with some company, isn't it? That company, if I want to get that company, I'll have to get the leads of that company. That I'll get it through some human being only. So that human being generally comes under retail banking. Similarly for trade finance also. What is trade finance? Others, okay, let me give you some idea about these topics, okay? Trade finance. Trade finance mainly deals with import export, LCs, letter of credits, okay? Not only LCs, it's also, there's a separate section also, that's called as collection, means basically import and export, okay? Consider that. Treasury. Treasury has nowadays become the most important part of the banking now, okay? Why? Because there is a lesser workforce required and more income is generated in treasury. What does treasury deal in? Treasury not only deals in investments of the money which the bank accrues from various departments, but it also looks at earning the profits now. Earlier treasury was only for reporting CRR, SLR. Few years back means almost 25 years back. But since 2000, treasury has evolved as a major income source for the banking. Merchant banking means what? Merchant banking, what do? They basically do the risk management over here. Risk management means if somebody wants to bring the IPO, okay, then the underwriting part is done under merchant banking. Okay, so underwriting means what? Here it's very simple. Suppose if you want to bring the IPO, okay, it's like the insurance business. You want to bring the IPO, then what will I tell you if I am the underwriter? Okay, I am the bank. I am doing the underwriting business. So what will I tell you? I'll tell you, see this. You bring the IPO for 100 rupees. It will get subscribed for at least 80 rupees. That's what my guarantee is. But if it does not get subscribed, okay, then suppose I say it will get subscribed for full 100. Okay, you bring the IPO of 100, it will get subscribed for full 100 rupees. But if it does not get, then you'll ask me the question, if it does not get subscribed for 100 rupees, then what? In that case, I'll guarantee you, whatever is the remaining amount, means it gets subscribed for, let's say, 70 rupees only. This 100 rupees IPO is brought, it gets subscribed for 70 rupees only. Then remaining 30 gap will be filled in by me. Got it? That is underwriting business. Okay. So merchant banking is one of the important part, but everywhere the clients which we get for this, anyone, we get it from retail only. Okay. So introduction to retail means why is it important? Then retail products and recovery. This is another module B. What all are the various retail products in banking? Now what all can be the product? There can be many products. Okay. You name it, you have it. Okay. Starting from insurance to mutual funds, to FDs, to smaller loans, to this stock tradings. Stock trading has also become an important part now in retail. Okay, stock trading, then recovery of these loans. Okay, so you name it, you have it. All the smaller amount loans, even this what appliances loan. Appliances means consumer loan, we call it. That also comes under retail banking only. Okay. Then next is support services. Support services means what all are the support? What does it? What is the supporting part? What is the supporting machinery to retail banking? So the retail banking supporting machinery is main marketing. See here. Now the days of customers coming to the bank are gone. Now the bank has to reach to the customers. Okay, it's a buyer's market now. It's not a seller's market. So the bank has to reach to the customers. Even now in many of our PSBs, we are not induced, or we are not acquainted with this topic of ourselves going to the customers. Even though many of the PSBs have now started this marketing division, right? We have one marketing person in the branch, but that is limited to only that staff. Others, do they do the marketing? No. But nowadays the things are shaping up separately. Nowadays what is happening, the basic rule in retail banking is now, you might be experiencing it. The rule is, sales is everyone's business. Sales is everyone's business. Let that person be cashier, let that person be clearing, let that person be officer, let that person be clerical, let that person be anyone. Sales is everyone's business. So that's why marketing has become a very important aspect over here. And wealth management. Wealth management, I'll discuss it separately. Basically, see here, we always confuse this topic of wealth management to financial planning. Okay, got it? We always confuse it. Wealth management means financial planning, giving all the tax planning and all these things here. Financial planning is a part of wealth management. But wealth management is a broader aspect. Okay. Okay. So let's get into the details. So retail banking is a service that is geared primarily towards individual consumers. Okay. Individual means one to one, right? That, remember that Shah Rukh Khan's film Chak De India, one to one, man to man marketing they call it, right? Means we target each and every client. Okay. Retail banking is usually made available by commercial banks as well as smaller community banks. Now what is all this? Okay. Commercial banks, here there are two types of banking in India basically. What are the two types of banking? Okay, I'll just write it over here. What are the two types of banking? One is commercial banking. Shall I write it over here? Yeah. Second is, yeah, commercial banking, commercial. Okay. And second is cooperative banking, cooperative. Okay. In commercial banking, again we have two, three types. One is nationalized banks, PSBs I'll call it, okay? Public sector banks, okay? Second is what? Private banks, private. Third is what? Hmm? Again here, we divide it, I'll write it over here, small finance banks, small finance, okay? Finance. Then fifth is what? Payment banks, payment, okay? Payment banks, okay? You have heard all these names, right? All these names are there, all these banks are there. But remember one important part. I've given this four classification. There can be one, two more. Okay, somebody can classify anything. But the point over here is all these three are combined under one. Private, small finance, payment. These are all private banks after all. Call it small finance bank. Let me give the name. What? AU Small Finance Bank, right? Bandhan Bank. What are these banks? These are small finance banks. But they are again private, isn't it? So logic remains the same. Let it be small finance, payment or private bank. It's after all a private bank. PSBs have now entered into this space. Understand this. PSB, now you'll say that, see sir, all these banks are going into private banks. Suppose if it's HDFC, then HDFC bank is going into small finance sector through various other modes. What are PSBs doing? PNB, SBI, any bank, Union Bank you can call it. What are they doing? They are also not behind. They are entering, they have entered this space, okay? Many of the UPI IDs, okay, payment banks means UPI IDs, they are owned by many of the PSBs. So now remember, we had that mindset earlier up to 2015-16, isn't it? We had that mindset. What was that mindset? Private banks, best service. PSBs, you have to stand in the lines, rows, huge customer clutter, all these things. Now the things have changed. PSBs are no more behind, and I'll tell you with challenge, the day the PSBs gear up more, what is the database of the customers which these PSBs have vis-a-vis these private banks have? PSB, if private banks have 100 clients, PSBs have 1 lakh clients. Such is the huge database, such is the huge proportion of database. Okay, 100 is to 1 lakh. Such is the huge difference of the clients. Now remember, if the PSBs work on their service properly, on their technology properly, how long will it take for these PSBs to take over these private banks? Nothing. Look at SBI. Where is SBI now? Look at PNB. PNB has changed, geared up heavily after that Nirav Modi incident some 3-4 years back, right? Now PNB has come up largely, correct? So that's why these PSBs are not PSBs which we work in. All of you might be working in PSB only. We are not behind. Now one important part I'll tell you. Many of you are working in this public sector banks only. How many of you have these login days? Today insurance login day. Tomorrow some CASA saving account login day. Then UPI login day. Then KCC login day. Then what? Some other login day, this day, that day, right? How many of you type in the comment section? How many of you have all these days? Yeah? Correct? You're having all these days now, correct? So what has happened over here? These days were earlier only in private sector banks. Now that culture has come to you also. Okay? That's why remember, retail banking or PSBs are no more behind any bank. Okay, remove that mindset now. Unlike wholesale banking, okay, retail banking focuses strictly on consumer markets. Consumer means individual, okay, whereas wholesale banking focuses on corporates. Got it? Move on. Features of retail banking. Retail banking is a banking service that is geared up primarily towards individual consumers, right? You might have understood by now. Individual customers, risk divided. Okay, retail banking is usually made available by commercial banks as well as smaller community banks. Now smaller community banks means what? This is a regular feature which you are seeing in this lecture right now. You might have heard 2-3 times smaller. In India you can call this as cooperative banks. Cooperative, okay. Because in US and other worlds, we have less cooperative banks. They call it community banks. Okay, means after all they are also based on the same culture of cooperation. Okay, what is this cooperative bank? Can anyone tell me? Because here, after all, we are in banking. You must know all the types of banking. What is the difference between commercial and cooperative bank? Commercial bank is limited by shares, right? Limited by shares means what? One share is equal to this one person equals to, we have the voting rights also. Okay. Now commercial bank is limited by shares and cooperative bank means what? Cooperative bank also has shares, but the basic concept of cooperative is different. What is cooperativism means? Cooperative movement had started because many of the commercial banks, PSBs, were not able to reach the village areas at that time in 70s, 80s. That's why cooperative banks flourished. But what has happened now? Nowadays, both these cooperative banks also and commercial banks also, both have flourished. Even the cooperative banks which were expected to work in the village areas are now working in the city areas. They are eating up the business of PSBs, private sector, everyone, isn't it? Even commercial banks, including private as well as this nationalized banks, they have also entered the village space now through various models here. You might say that, okay, how can I go into remote? But you have those, what do we call them? Business correspondents, right? BCs, right? Business correspondents, you have it. All these PSBs. So they have entered this village area. So if the village strength is, let's say, 500 houses, okay? If a village has 500 houses or 500 population, forget this houses, okay? 500 population. So if the village has 500 population, why should the bank open the branch over there? It can only go with that BC, business correspondent, isn't it? So that's what has happened. What is the BC? Who can tell me what is the business correspondent? Business correspondent is basically that outsourcing part which has been done by this nationalized banks, isn't it? So even nationalized banks have gone for this outsourcing now, unknowingly. Unknowingly means hidden part. Okay. So got this point? Okay. Cooperativism means what? There are again here various types of cooperative banks. National cooperative bank, state cooperative bank, district cooperative bank, various. These are the main three cooperative banks. Okay. There is also something called as urban. We'll study them in details because we are having all these topics over there. Okay. Retail banking focuses strictly on consumer markets. Consumer markets means here it will be including home loans, mutual funds, shares, insurance, means what all is related to education loan, what all is related to individual consumer, what all you require, everything will be looked on by the retail banking. Okay. Even now you might be getting the spend analysis in your various websites, right? Many of the banks are giving the spend analysis to consumers. What is that? Spend analysis means, suppose if I have spent online something, okay? So on what percentage of that I have spent it on clothing, what percentage of that I have spent it on food, but for that you need to make the payment through online banking only, means UPI and everything, okay? So in that case what happens? Bank will be able to give the additional service to the client, that how much is the client spending on clothing, how much on retail, how much on this, how much on that, cinema, all these things, right? Retail banking is generally mass market driven, but many retail products may also extend to small and medium sized businesses. So mainly retail banking is mass driven, isn't it? But if you have the HNI clients, okay, so HNI clients will be there, definitely HNI clients are there in each and every business, right? Even the retail banking has HNI clients. So if the HNI clients are there, these are called as small and medium sized businesses. Now means they include what small and medium term means, this proprietorship, partnership, even certain private limited companies. So here, if the turnover of that company is lesser, it can be definitely included in retail banking, okay? What are the advantages? Client base will be large, simple logic. Therefore the risk is spread, right? So diversified risk, simple. Customer loyalty. Loyalty is strong. See here, just tell me one thing from your experience only. Everyone amongst you might be having at least 2-3 bank accounts, right? One in your bank, some in some other bank. how many times have you changed the banks? Or how many customers of your bank come to you for changing the bank? Never. That's a Indian mentality. Customer is strongly loyal to the banks. Okay. So that's why the loyalty is strong. So customers generally do not change from one bank to another. There are more attractive interest spreads since customers are too fragmented to bargain effectively. Now the point over here is the retail customers, do they have the union? Customers, do they have the union? No. Do they come together using something like PIL or something for you in your bank that we want this interest rate only, we don't want this interest rate? No. So that is the main part. Attractive interest spreads means the FDs I can reduce the rates. Okay. FDs I can definitely reduce the rates, and loans I can, of course, in the competition I can't increase the rates, but I can at least keep that those substantial so that I earn income in that. Okay. Since customers are too fragmented, right? There's never a unity among the customers because the customers are from various different segments. Some customers might be rich, some might be poor, some might be having job, some might not be having the job. Okay. So that's why they are fragmented. Credit risk tends to be well diversified as loan amounts are relatively small, isn't it? What is a home loan? What is the amount of home loan? 50 lakhs max. In cities you might be giving it for 1 crore, right? 1 crore, because now the houses in cities, you go in Mumbai, okay, what is the rate of one house? Even in the outskirts, forget this main areas like Fort or this Nariman Point, or even in Delhi, okay? Many of you might be living in the metros, right? So even in Delhi, Mumbai, Kolkata, what is the rate of the houses? Is any flat below 1 crore nowadays? Hyderabad, Telangana, yeah, what has happened? Bangalore, what are the rates? So even the smallest house available is around 70 to 80 lakhs, 1 BHK. So if 1 BHK flat is 70 to 80 lakhs, 3 BHK flat will be at what rate? 1.5 CR? 2 CR? Right? So if the house is of 1.5 to 2 CR, you'll have to give a loan of around 75 to 80%. There is a cap, of course. Here, any loan above 1 crores, okay, there is a cap. You'll study this, okay. RBI has given various caps for this. So the loan percentage will definitely be around 1 crore, isn't it? So in that case, the loan sizes are relatively small, but comparing to this corporate banking, retail banking, if it's a retail client of 1 crore, it's a huge client for the retail business, isn't it? The pricing indices were well developed based on these usage patterns: less active, active, and very active users. This is the major classification done by the banks for various clients. Less active means what? Those clients who rarely interact with the brand. They have the account, but they are not doing anything over there. Just at account. Balance is kept. So keep it. What about active clients? Active clients means they regularly visit the branch or they interact on the net banking. And very active clients means what? Those who are eager to purchase something, get something from the bank. In the sense, somebody wants insurance. Here, what our target is in the banking today is we have to convert less active to active, we have to convert active to very active, and we have to convert very active to our purchasers, buyers, okay, of various products. Okay, understand, there are roughly, I'll tell you, 30 to 37 products. When I was in HDFC Bank, we had 37 products at that time for one client, retail. So our target over here is to sell all the 37 products to that client. All. Of course, everyone might not buy all these 37. Even if you are able to sell 6 products to one client, 6 products to one client, then also you have won. Your bank will go higher. Okay. Why? You might all be seeing this stock market. Many of you might be seeing this stock market, right? Why is the share of HDFC Bank moving so high? Why is it so high? Because of the cross-selling. HDFC Bank, in fact ICICI Bank, even now SBI and PNB, and Union Bank also. But I'll tell you, mainly in private banks, why have they grown so much? In stock market, at least I'll talk of from that angle. Why? Because the point is they are mainly on cross-selling. Every customer of HDFC Bank needs to have 5 to 6 products of one, means single customer needs to have these products. So if you have a cross selling, see here 6 products to one client. So it's as good as getting 6 clients, isn't it? So always remember one basic rule in retail banking: selling to existing customer is easier. Selling to new customers is very difficult. Okay. Usage pattern of particular products vary significantly between countries, leading to major differences in global and local price. But obvious, what is required in one country may not be required in other country, right? Many these Middle East countries, okay, those countries don't have interest part in their accounts. They don't fetch interest, right? They don't want interest, right? But in India or in US, it's separate. So depending on the countries, okay, and the culture, the things change. What are the delivery channels? There are various delivery channels. Delivery channels means what? Through which I can deliver my product to the client. There are two aspects in multi-channel management. First, to develop remote channels and reposition branches to create more value to the customer segment. Now, remote channels means what? What is a remote channel? See, a remote channel means there where human being is not involved. Okay? Remote, I'll mark it over here. Where human being is not involved. What do you mean by human being is not involved? ATM, internet banking, UPI. Is any human being involved? No. So, that's the basic logic. So, develop remote channels as much as possible, so that the load on the human being decreases, the load on the staff decreases, and reposition the branches to create more values here. Create more value means what here? The more you have remote channels, the more branches can create the value. Why? Because what happens if you don't have remote channels? Even let's say I have to withdraw 100 rupees. So I'll enter the branch, I'll make rush over there, withdraw 100 rupees, speak to you, do some giz, right? This is not right, that is not right, do something, okay? But if I am having alternate channels, like ATM, if the bank is having, so I'll withdraw it from the ATM, nobody to speak, and whenever I'll enter the branch, I'll enter for something positive aspect, because my basic needs are served by these remote channels only, isn't it? So the more any bank has remote channels, the more value it can create for the customers, okay? Second, to increase customer satisfaction and differentiate themselves from the competition, while also improving the productivity of the multi-channel model. Now what do you mean by this? Customer satisfaction is to be increased, means what? See here, when the more you give remote channels to that person, like internet banking or what, wallet banking, then ATMs, all these things, means things are moving ahead. Largely now we are moving towards a blockchain banking, isn't it? So the more I give remote channels to that client, the more value I'll be able to create for that client, the more will be the customer satisfaction. See here, we are not here to create customer satisfaction now. Understand the difference in retail banking, okay? You are not here to create customer satisfaction. You are here to create customer delight, okay? Delight. When I was in Citigroup and in DBS also, Development Bank of Singapore, there we didn't talk of customer satisfaction, we talked of customer delight. Means if customer wants 50 things, I'll give him 60. Okay, so means if customer requires 50%, I'll give him 60%, so that 10% will create a delight in that customer. Okay, so second is to increase customer delight or satisfaction, differentiate themselves from the competition, while also improving the productivity of a multi-channel model. So productivity is to be increased. What do you mean by productivity increasing of multi-channel model? What do you mean by this? Here, these words you need to understand very properly. Okay, I'll ask you a question. ATM, okay? Many of us go to ATM, clients go to ATM, okay? Tell me, how can I increase the productivity of that ATM? Productivity of ATM. ATM is what? Go, put on that card and get money. So what is the productivity? How will I increase the productivity? Yes, type. There are various ways. I can make general insurance online on that ATM. You go there, visit the ATM, tick, 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 general insurance purchased. 5,000, 6,000 premium, 7,000 roughly general insurance is for vehicle insurance. Okay, max to max two-wheeler insurance is for what amount? 5,000, 6,000, 10,000 max to max. Okay, so 10,000 even these things can be purchased online through ATM channels only. So this is increasing the productivity. Okay, similarly for what consumer loans, if my CIBIL score is better, why do I need to come to the branch for a consumer loan? I have to purchase a refrigerator, let's say 25,000. Why do I need to come to the branch, submit the form, do all these things? Why? If my CIBIL score is above 700, 750, why do I need to come to the branch? I'll go to the ATM, tick over there. ATM, my computer will already know what is my CIBIL score. It will pop up to me. See this. Do you want this loan of 25,000? Buy it immediately. Immediately I can buy it. Why ATM? I can go on internet banking, mobile now, isn't it? So this is increasing the productivity of that channel. Okay. Similarly, you can increase the productivity via branches also. Whenever any customer comes to your branch, the main focus of the banker should not be only to serve that customer and let him go. The main focus of that customer should be number one, serve that customer. Serve means whatever is required by that customer, give him that. But after that, new policy comes. That policy is, once he is delighted, once he is satisfied, now what you do? You sell him whatever you want. What is beneficial for you? Whatever you want means, of course, should be beneficial for the client also. Otherwise, it will be a wrong selling. Okay, wrong selling is not allowed in banking. Okay, whatever is best for that customer as per your conscience, and it is beneficial for the bank also. It should be there, isn't it? So you need to sell to that client once that customer is satisfied. First, serve that customer better, and then increase your productivity. Okay. Traditional versus tech banking. Traditional image. So office in the main street, the branch manager understands the local market, the manager has strong customer relationships, isn't it? You might have seen all your branches up till now were in main cities, main location, main square of that city, branches there. Okay, but nowadays have the things changed? Yes, they have changed. Why? Because the location in the main square of that city, what does it cost? And what are the margins in retail banking? So margin versus cost, these are to be checked now. So that's why nowadays the new culture which has come up is give everything tech to the bank, to the customer. Okay, all that ATMs, internet banking, app banking, UPI, you give everything. And just for reference, means if that customer faces any problem, so that he can come, put some office or branch in some not main location, somewhat nearby location. Okay, but it should be less costly also. So traditionally what used to happen, office was in the main street, the branch manager went into the market and he understood the local market. Okay, nowadays also here every employee needs to understand the market. That part never goes out, right? But only the point was it should not be in the main street. Nowadays it's not required. The manager should have customer relationship. That's a basic logic. Brick and mortar bank or any business for that matter. Let any technology come in. The manager, why? But I object to this point nowadays because the manager should have customer relationship strong. Why the manager? What about others? Every employee of the bank should have strong customer relationships. That's the basic logic. So banking today is not only limited to traditional banking, but remember, traditional banking is not out. It is still there and it will always be there. Because let any technology come, human relationships are very important in any business. So what is tech banking then? Tech banking means banks have also developed centralized call centers, right, to handle customer service issues, initiate transactions, including deposits and loans. So banks have developed all these things now, isn't it? So call centers are there. What do you might be getting all those calls, right, from all those call centers. Sir, do you want credit card? Free offer, 1 day offer, 2 day offer. Now your processing fee is not there. Small loans. Small loans means what? Small loans. Small loans 20,000, 30,000, 50,000 up to that loan. That right? So call center, sir, within 1 day you'll get that loan. No documentation required, isn't it? So we have reached to that level. Why? From where do they get all this data? They get that data from CIBIL. If your CIBIL score is the best, means above 700, all the banks will call you. Okay? So call centers to handle customer service issues, to initiate transactions, including deposits and loans. Okay? Many banks have shifted some activities like small business loan approval from branch to regional or HO. So what is this? Many banks have shifted activities like small business loan approval. The role of traditional bank reduced in the delivery of retail banking services. Here, what do you mean by this sentence? Earlier what used to happen? Any loan, 50,000 loan, 1 lakh loan, any loan, okay, that used to be sanctioned by the branch itself. Now the new model of banking is branches work just as a delivery agents of the head offices and their regional offices. Any loan comes, just put it in the system, and that loan file automatically online goes to the RO or the concerned person, whoever that concerned person might be. That loan file goes to that online only. No physical file is moved. Then loan gets sanctioned. The sanction letter is also received online only through the system. And then the role of this branch remains what? Just to follow the sanction letter and give that amount. Isn't it? Nowadays even this part is gone. Means that sanction letter, all this 50,000, 1 lakh, up to 10 lakh rupees loans, I don't think so anything is required in this. Okay? Because if the customer's the CIBIL score is okay, financial history is okay, then what is the requirement for all this documentation, isn't it? So generally, if you see the survey of India, okay, 90% of the loans in India, 90%, volume wise, I am not talking amount wise, volume wise, number wise, 90% of the loans in India are less than rupees 1 lakh. Number wise, I am not talking value, okay? So 90% are less than 1 lakh. So why do I need to serve these customers through branches if the loans are less than 1 lakh? They should be immediately given through call centers and alternate channels, isn't it? So that way you have to think always here, banking is not the old banking thinking just going, and this JAIIB topic also, see here, JAIIB and CAIIB exams over here, they are not there, remember, for your just going and passing that exam. If you see the new portion, that is planning, means that portion is guiding you towards more knowledgeable banker. You are a finance employee now, you are not a banking employee. Okay? Because I'll tell you the value of the banks in the financial stream, financial world actually, that is decreasing now. Why? Because NBFCs are giving as much loan or in fact more loans than banking now. NBFCs are giving more loans than banking channels. Remember, okay? So that's why we are finance employees now. We are not only bank employees. Got it? Reasons for emergence of retail banking business in India: some strong economic fundamentals, growing urban population, higher disposable incomes, rise in young population, emergence of new customer segments, a rise in mass affluent space, explosion of service economy in addition to manufacturing space. NBFCs have also aggressively entered the bottom of the pyramid segment and posing a big threat to conventional banking players. Now many of you might be thinking, sir, what is this all telling? What are you telling? Remember, these all questions will be there in the exam. Okay? Strong economic fundamentals means what? What is the growth rate of India? Type fast. The GDP rate for India. Where is the GDP pegged at? Roughly. Not exact figure, okay? It is roughly pegged at what? What are you getting from RBI? RBI has recently given this figure of GDP, isn't it? They are pegging it at around 6.5%, plus or minus 0.25, 0.5 here and there, okay? So now tell me, even if you grow at lowest level of 6%, lowest level I'll call it, what is the rate at which USA is growing? What is the rate at which UK is growing? What is the rate at which any other country in this world, any other I am talking, any other, okay? Even including China, which we are hearing every now and then, okay? Even that Brazil, which we are hearing every now and then, right? We call it BRICS, right? Brazil, Russia, India, China, and South Africa. Including these all countries except India in BRICS, where are these countries growing? They are not growing at all at the rate of 6 to 6.57% now. Okay. Even if we consider the growth rate of 6% of ours in this time, okay, once this curve moves on, I don't think in India by 2023 the growth rate of India will move on to more than 7.5 to 8%. Okay, so these are called as strong economic fundamentals. With the inflation levels also, see here, inflation levels need to be controlled by any bank, and that's the basic primary reason, job of any central bank, reserve bank, isn't it? Growing urban population is now moving from villages to cities, right? So as population grows more in urban areas, banking space, retail banking space is required more. Why? More homes will be required, more home loans will be required, more insurances will be required, more wealth management will be required, isn't it? Higher disposable incomes as the salaries increase, okay? As the salaries increase, what do you mean by disposable income? Look at this cursor, okay? Disposable income means the income at which is in my pocket after all the expenses, okay? So that is disposable. Rise in young population, right? Which is the most young country in India today, in world today? Which is the most young country in the world? The most young country in the world is India. Why? Because 65% of our population is less than 35 years of age. That's why we are the youngest country in the world. Emergence of new customers, of course, leave some smaller countries aside. That's not our concern, okay? So don't look at, see, never compare India nowadays with all these smaller countries. India will be compared nowadays with USA, UK, all the big economies, and we are surpassing them with all the yardsticks. Okay. So these metrics have changed now. Emergence of new customer segments, right? Rise in mass affluent space. Mass affluent means what? Those who are spending. Affluent means what? Those who are ready to spend. Okay. In malls, in shopping malls, in what malls means, I'll tell you. Earlier, many of you might be remembering, whenever you used to go to the films in that single, what do we call that? Single screen theater, right? We used to call that single screen. Whenever you used to go to movies earlier, what were the balcony tickets? And today you go to malls, okay, what are the tickets? They have risen almost 3 to 4 times, isn't it? So this is known as the affluent space, okay? Explosion in service economy. Service economy is the something which has changed India. Okay. What do you mean by service economy? Service. Tell me the companies in service economy. Tell me the companies. Which are the companies in service economy? IT, correct. IT, everyone is typing. Then what? Others? IT is there. Agreed. IT is there. What about others? Other services? You are forgetting one main income, one main service company. That is what? That is banking, the way in which you are. Right? You and me all work for banking, right? So in that case, that is known as a service economy. Service means what? Where no production is made, physical goods, right? So IT, banking, all these NBFCs, all these movies, theaters, all these are service economies, right? Okay. So rise in these service economies in addition to the manufacturing space. NBFCs have grown heavily, okay? NBFCs have also grown, okay? Have also aggressively entered the bottom of the pyramid space. Now bottom of the pyramid means what? This is bottom of the pyramid means this, you can think of it like Maslow's hierarchy. I'll come to that Maslow. We are having that topic in Maslow, okay? So bottom of that pyramid means, just now I gave you that example, loans up to 1 lakh rupees. So that comes under bottom of that pyramid. So when you have bottom of that pyramid approach, these NBFCs, now there are more elements to this. Okay, what all elements do you know which are there in the bottom of the pyramid now? Okay, let me write it down. Okay, number 1, PSBs, public sector banks, means you also give the loans below 1 lakh. Second, you have what? Second, private banks. Private, okay. Then I'll include in this private all these banks. What? Payment banks, payment, Then what? Small finance. Okay, I'll include this small finance. Include. So these are all included in this private space only. Okay, done. What is the third segment then? Only this much. NBFCs, non-banking finance corporations, right? All these Muthoot and all these things, gold loan companies, what are these? NBFCs, they give the loan up to 1 lakh rupees. Now I'll give you one more segment which is not there in any of the books up till now. That new segment is neobanks. Neo. That is called as, what is neobank? Neobank. Okay. Can you imagine Google giving a loan, personal loan of 1 lakh rupees? Can you imagine this who? Amazon giving a loan of 1 lakh rupees? It can give, and it has started giving. What these two companies have started, not only two, there are all, Flipkart and everyone has started. What are they doing? Suppose if I want to purchase some refrigerator from them, okay, online. So what are these guys doing? They are telling me, okay, you want this fridge? Okay, I'm having three options to you. What? You pay cash or you pay through what? EMIs. Now who are giving these EMIs? They say, okay, we'll give. We are having tie-up with this bank and that NBFC. That NBFC is there only. So that is called as Neo. Means what? These all consumer durable companies, these all selling websites, they have come into the finance space now. So that is called as the bottom of the pyramid approach, and these everyone is targeting this bottom of the pyramid. Okay, because it's a huge, what is the percentage, what is the population? 140 plus crores, right, in India. So if with such a huge population, everyone needs to have a square meal, right? Means two meals a day, right? So if everyone needs that, everyone will be needing these basic amenities also: home, shelter, right, food, clothing. So once this market is growing heavily, isn't it? Role within the banking operations, business models. The business models, now this is something different. Banking, what are the models? Okay, the business models adopted by retail banking among the PSBs and foreign banks are, means basically vary among the PSBs and foreign banks. So what are these approaches? One is this SBU, strategic business unit. Second is departmental approach, and third is integrated approach. Okay. Now what is this strategic business unit? It means what? Every unit needs to earn for itself. Every unit needs to earn for itself. Means if I'm in the operations or clearing department, my clearing department should generate the leads and pass on to the sales team. If I am in the cash, my cash department needs to generate leads and pass on to the salesperson, so that the accounts are converted. All customers are converted. Departmental approach means generally we have this in our PSBs. Clearing department separate, cash department separate, all these departments separate. Okay. Integrated means it's a combination. See this. I'll come to this. We are having one more main topic over here. We'll be coming to this integrated approach, horizontal and vertical models. We are having it. I'll show you that. In foreign banks also, SBU is a business model followed with a defined business focus. The demarcation as a SBU is more a management by objective process, wherein the business means where the business is focused on earning the income. See here, management by objective is a new term. Not new term actually, it has been pegged roughly 15 years back. Okay, it has come into the limelight. Management by objective means the bank first focuses on the objective, what all they have to achieve, and after that, based on that, what do they do then? Based on that, they start working on this so that to achieve that goal. Okay. So MBO is a strategic management model that aims to improve the performance of an organization by clearly defining the objectives that are agreed to both by the management and the employees. So firstly, we need to have the clear demarcation, whatever have we to achieve. And once we know that, whatever we have to achieve, based on that, then we'll employ the staff. We'll train the staff to achieve that target. Okay. Implementation models. Okay, let me check if this is a part in you. Yeah, it's a part for you only. Implementation models. Banks adopt different models for implementing retail banking initiatives. The most common strategies are end-to-end outsourcing, predominant outsourcing, partial outsourcing, and in-housing. Now, these again will come back to this in the later stage of this lecture only. Last part of this lecture is that only. Okay. Horizontal and vertical models. I'll cover some part of that today and remaining in the other lecture. Being this is the introductory lecture, I need not bombard you with everything today. Okay. So outsourcing, I'll just give you the rough idea of whatever it is. Okay. End-to-end outsourcing, predominantly outsourcing, partial outsourcing, and in-house sourcing. Means there are four models in this retail banking: horizontal model, vertical model, predominantly horizontal, and predominantly vertical. I'll come to that later. Okay. I'll show you the image today. Okay. I won't take this topic. This topic I'll be taking later. Otherwise you'll say, sir, first lecture only and you are boring it so much, isn't it? Are you getting bored? Type yes. Are you getting bored? Even if you type yes, I'll continue, because you have to clear this exam. That's your part. See here, life is not always in. Whenever you see any movie, right? You go for that movie. In movie, do we always have that fight sessions, or whatever is attractive or whatever is exciting? Do we have always complete 2-3 hours? We have that only. Nowadays 3 hours are gone, isn't it? Movies are for 2 hours only. So do we have full 2 hours? No, right? Some parts are boring, but that we have to watch it, isn't it? Same thing in schools. You had some topics which were boring, but then also you had to go on through it. The implementation model depends on the product range, process requirement, technology preparedness, delivery capabilities, including human resource and regulatory prescriptions. So this whatever at what stage, how to deliver the product depends on these all factors: product range, requirements, process requirements, technology preparedness, delivery capabilities. Okay. Then let me come to one important topic, that is wealth management overview. See this. What is wealth management overview? Because mainly the topics which I told you are under this products, then retail banking products, and then module C was the support services, the technology and marketing, all these things. But the fourth module is of the wealth management. So what all will you learn in wealth management? You learn financial planning and wealth management, the difference between them. Okay. Financial planning is a part of wealth management. Then you will be learning net worth and investable assets, means net worth of any client. How to propose something to that client, means invest in stocks, invest in mutual funds, invest in FDs. So it depends on his investable assets. Then you will be learning wealth and estate planning services. Estate planning means what? Home loans. Okay, that's a part of that. Estate planning means, estate means what? Home loan. Home generally. Okay. So wealth and estate planning. Then you will be learning financial planning for life stages. Depending on the life stage, will you, okay, I'll ask you one question. Will you suggest any client who is for 70 years of age to invest in totally in equity? Invest in equities, invest in this share, that share, invest in options, call market, invest in that. Will you suggest him? No, right? So life stage, depending on the life stages, you have to convert that client or suggest that client for equity, debt, risk, non-risk, all these things. Okay, investment management. So how to invest so that there is a regular source of income for each and every individual. Okay. Then what will wealth management teach me? The different client segments in wealth management universe, means what are all the various clients, means starting from the age, demographics to their level, means financial level, all these various client segments. Okay. The career paths available in financial planning and wealth management. What all are the career paths? What all will you be getting in the PSBs also? That all will be taught to you. Introduce the skills you need to succeed as a financial planner. So what are the skills required? What all, see, your main skill is always empathy. Look at the client's perspective, from the client's perspective, to succeed as a financial planner. Various planning services provided by the wealth managers. Okay. So what all are the various products which we provide under wealth management to the clients? Then traditional and alternative asset classes, right? Traditional means what? FD. Everyone had come to FDs only, but now alternative asset classes means mutual funds, debt funds, CDs, CPs, all these things have come into that. Okay. See here, difference between financial and wealth management. Understand this difference here. It's only for introduction for you now. Financial planning and wealth management. See here, what do we do in this financial planning? Creating step-by-step goals and approach for achieving financial goals, right? Step-by-step guide we do it, right? Invest in equities when you are at age of 27, 25 to 35, start investing in that. Then when you are at age of 70, reduce your investment in equities. Then managing income, expenses, savings, investment depending on the client's life stages, right? Stages of life. So what level the client is, at what is the age, what is the income group of that client, depending on that we suggest the various aspects. Financial planning services such as retirement planning, estate planning, succession planning, these are all suggested under this financial planning only. Now this financial planning becomes a part of this wealth management. Financial is always a part of wealth because wealth is important. Finance comes when you have wealth, isn't it? If you don't have wealth, then what's the use of finance, right? Okay, now I'll come to the last part. Only this I'll touch up some part. I won't be taking in details today, right? Because what happens, otherwise you'll get bored in the first lecture only. Just now I told you about this outsourcing part. So same thing is over here. I'll just touch today, okay? In the next lecture I'll be covering it in details. Means, no, not next, whenever the topic comes. It's horizontally organized, vertically organized, predominantly horizontal organized, and predominantly vertically organized. Now what do you mean by this? Horizontally means what? These departments, various departments, they don't talk to each other. They don't discuss the client or share the client data with them. Vertically means what? There is a common database and all the products, all the teams share the same database. So which is beneficial? What do you think is the most beneficial, this one or that one? Of course vertical model, because in the same database you can sell 7 to 8 products. Whereas over here home loan is not talking to personal loan, personal loan is not talking to savings account, not to FD, FD person is not talking to wealth management, okay? So this is these two are completely opposite ends, okay? Now which are these in between then? Predominantly horizontally organized and predominantly vertically organized. Here it's like this. Have you heard that song? Thoda sa pyar hua hai, thoda hai baki, right? Or what? Zara zara. Pyar, what? Sapne churane lage zara zara. Isn't it? What do you mean by this? Thoda sa pyar hua hai, thoda hai baki. Means what? Yeah, I'm in love, but I'm not consider you as a friend only. Yeah, you are my best friend, right? That way. So same thing over here. Predominantly horizontal. Yeah, I don't talk to each other, but somewhere I'm talking to, somewhere, some part I'm talking. Okay, he's my okay friend. Okay. Vertically organized. Predominantly vertically organized. Yeah, I'm moving. I like this model, but I'm not into it. 70% of my products are over here. Here 30% of my products are moving towards this. So remember, it's like this. Starting from stage 1, then we move to stage 3, then we move to stage 4, and then we move to stage 2. It's like this, okay? The sequence is never a 1, 2, 3, 4 over here. The sequence is always 1, 1, 3, 4, and then 2. Okay, this is the sequence of any bank getting transformed. Okay, the ideal model for any bank is vertically organized. Ideal. Every bank should focus on this model only. Okay, more on this later when we come to the topic. Okay, so I'll stop over here today. Okay, so meet again, let's meet again. This was the introductory session, but hope so you have enjoyed it. Okay, main is enjoyment. You must understand the concept. Okay, chalo, bye.